Guys, good afternoon. Thanks for staying. For those of you who have been tortured by me all day and yesterday, resisting with resilience is important. Finance, as you know, teaching strength is important, is much more important than other things. So let's get into this. We have a great panel. I'll say just, I want to show you two images to kick off on these topics, which I partially understand. That's why we have experts here. And but coming from financial markets, this is a fascinating topic. I agree with what Simon has said, and we need to know more because this is the future, is happening, and it's already happened. So I want to show you this because it's an affection problem that I've got, because I was in my very early days. I was a runner on the floor of the stock exchange. We was looking a bit like the first panel on the top left. A very crowded place where everybody was shouting. In fact, it's called an open outcry, where you can't understand anything of what they say. You have to use your hands to exchange signals. And of course, the myth is that the Italians do it better because we move our hands all the time. That's not necessarily true. They do the same in the London Stock Exchange, exactly with the same kind of dynamism. So this is what happened to the trading floors. This is happening now. So what we see on the top left is the trading floor a long time ago. Then it becomes screens with computers, lots of computers and phones. There's still people talking to people at some point, even if they were looking at things. And then there is nobody. This is the hardware place where the software is residing for companies like Citadel or other things, that companies like this that do electronic trading all the time, and they exchange an extraordinary amount of trades, most of which, by the way, are not dealt, which is one of the part of the high frequency trading, which is fascinating. I got a very tiny video, 1 minute at the end to show at close when we finish. I don't know if it works. If it works, I would like to see that, because it's a slowed down version of what happens in half a second, how many thousands of orders are visually seen through one of those networks. So this is what's going on now. How many traders and sales do you see now? Not that many. So for especially our younger students that want to go to work in investment banking, still a good idea, but you got to get into the idea, the fact that there is a lot more software and other type of skills needed beyond being able to understand markets, which is still important, but I'm not sure it's the only thing needed. And I wanted to show you this picture. This is a visual signal of what happens with high frequency trading and with algo trading. This is 1 second on the first day of trading on the stock market in New York after the IPO of Facebook. This is 2012, so a very old time. So now it's probably 10 times bigger than this. And what you see, each dot that you see, is one is a bid, the other one is an offer. So see how many hundreds of trades were presented to the market in the first 1 second of trading. You can't see below, but it's this is what happened in 1 second. Some of those trades were done, others were not done, but this is never going to be, it would never have been possible in an open outcry, in a traditional way of dealing. It's only possible with these new technologies, which our friends will describe. So it's amazing. This is 1 second of one stock in the opening at the beginning. Imagine this going on every day, all day, on all exchanges. And our colleague over there was explaining to us that's happening in India at amazing speed, for example, in their stock exchange, which apparently is bigger than I thought, maybe worth a consideration. So just an image to show you how things are changing. This is 2012. Now things are much faster, much bigger, much more difficult. So I want to introduce, first of all, I would like to pass the microphone to my great friend Terence, professor of several things, mostly finance and digital and innovation and other things that we barely understand. He's one of the biggest experts of artificial intelligence, writing books on these things. So on that topic, hopefully you can make it understandable for all of us. I would like to ask you first if you can tell us how artificial intelligence is impacting our lives now and tomorrow in things like jobs, employment, which jobs are being created, which one are being destroyed, how much cooperation we need with that or we are obliged to have. Thank you.
Well, first, thank you very much, Vittorio, for the wonderful introduction. It's great to be seeing pictures like these because it all of a sudden it reminds me that how fast technology has actually been moving. And of course, in the financial services is usually one of the first adopters when it comes to technologies for a very simple reason, because like time is money. And second, quite a lot of very often they are the one who actually has got the capital to invest in. So what they are always after in financial services is always two things. One is speed, and the other one is accuracy. Because if you can imagine, right, even if you got speed, you can actually do your trading quickly. If you cannot get the accuracy right, you have a very high chance of, one, making an amplified loss, and two, is failing to follow compliance. That is already in itself. It can be a very huge legal bills that's coming along. So answering your question. I think I've said it many times before, so I'm going to actually repeat the same thing again like a broken record. And the fact is this, if you are looking at what are the things that AI can, what kind of jobs AI will be mostly eliminating, or basically would be the, what kind of jobs would be the first to be under the axe of AI, it would be those jobs that are, one, not physical, because if it were physical, it will be done by robots. Okay, so
it's already gone.
So it's a physical. So I'll give you an example. The fact is this. If you are looking at a job that is physical, it is usually a lot of the time it's actually cheaper to use humans than building a machine. Okay, I'll give you a very quick example. A friend of mine heads a logistics company in China. And he basically bought a German company, sold itself to the company. Basically, what the German companies could do is to use machines to actually fetch stuff from the warehouse. The companies didn't do was not going very well, so it decided to sell itself to the Chinese company. The Chinese company bought it. My friend actually said, we'll buy it. First thing he did, basically stripped out all the machineries, sell them. And then why? Because he said it's much cheaper to actually get a couple of people, sit on forklifts and actually do the work much quicker, much faster, much cheaper. Right? Now, in that case, apparently accuracy is less of an importance than in financial services. Right? So one is physical stuff is it's not necessary replaced by AI. What AI can also another type of another characteristics that that comes with a job that AI would replace. It's basically those jobs that are routine, standardized, right? Because AI, if you think about it, you're using machines to perform the same task again and again and again and again. So any jobs that requires a routine, standardized, actions. They are the first one to go. And three, it has to be something it has to be a jobs that has got enough volume. So you have to do it a lot of times. Otherwise, it's not worth investing in. So a very simple example is if you are processing, let's say a bank account applications, and you decided to use AI to read a UK driving license. Okay, you would invest in that, because there are so many people who are actually applying with their UK driving license. But you would never, at least at this point, invest the money into reading, say, American driving license, because there are so few of them. It's much better, much cheaper for you from the investment perspective to actually use humans to actually process those applications. So for me, in financial services, those jobs that are basically standardized, Non-physical, usually most of the jobs in financial services is non-physical anyway, and routine ones. They are the one to be, taken away by AI first. Yeah, which basically means, if I may add, right, is this. I think ultimately, I used to work in M&A, and a lot of the M&A stuff that when I was in investment banking back then, I was a monkey basically, and so I believe that a lot of the work that these monkeys could do, and they can actually be, it can be done by machines. So because ultimately, right, what you're doing is trying to actually, use machines to actually crunch numbers for in terms of coming up with the valuations, what are the drivers behind that can affect the valuations, and therefore, I think what we will see is that AI is gradually going to move up the ladder of abstractions when it comes to the type of jobs, the sort of jobs that it can take. So away from us.
That's good news for people like me that can perform valuations of companies that are not going to be in so much demand.
No, nothing can replace you.
No.
We all know that.
This can. But maybe in the next round we're going to ask Terence which jobs are probably being created by this shift. So some are going to be gone and others are going to be created, and nobody better than him can tell us. So let me pass to our new friend Nilesh, and because he's advising on emerging technology and business on these topics, artificial intelligence, here and in the East, in India especially, what differences and what applications do you see which is interesting in India or which is similar or different from what you see over here, because you are in both places?
Okay. Let me do it. Let me turn it on for you.
Right. So I've got experience of being here in London for 16 years, been there, done that. I was instrumental in launching Metro Bank. And then 5 years ago moved back to India and been there for 5 years now. So I've got an experience of both ends of the spectrum. So just picking up from the points that Terence was saying, AI obviously talks of accuracy and speed. So when you talk of accuracy and speed, you have got two levels for that. So if you just touch one of it, AI is more like a wheel. The more you turn, the more accurate it becomes, which means that any repetitive task, the accuracy when it is almost as good as what you're doing, the repetitive task is replaced. And when you do it at a speed, then obviously you are better off having that tool as an AI, which has got a better accuracy and has a speed, which means you are removing that as a job. But traditionally, what you see is the Western world, because of the industrialization, has got better infrastructure than some of the Asian countries. And because of the better infrastructure, the focus here is always operational efficiency and innovation. So let me come back to that word. Operational efficiency increases your speed in doing the same thing, and then obviously you innovate in that. But sometimes what AI is doing, which is what some of them are getting, probably I would say, I won't use the word concern, but probably trying to notice, it is doing a palindrome shift. It is doing a radical innovation. It is leapfrogging something that you have not even thought of. Some of the jobs that will be there in the next 10 years, they are not even available now. And where AI is coming into picture in terms of the speed and accuracy on a radical innovation, just to give you an example, here in UK, there's a lot of focus on increasing operational efficiency in every sector, right from healthcare, fintech, financial services. So you name it, like for example, credit services or credit scoring. You're talking of better credit scoring, better healthcare, and those kind of things. In Asian country, there's no credit score. There's a huge population. The credit score is not available. So how do you lend money? How does that come into picture? That's where AI is doing a leapfrog and is skipping the entire concept of credit score and then saying that are they eligible to be lent or not? I don't know, I hope you understand. So that's a leapfrog. You are skipping the entire concept of credit score and you're saying, are they eligible or not? Now, we are not going into the part of explainability of AI, which is a completely separate topic. You might argue that how can we lend somebody if we don't know the steps as to why the AI is saying that we should be able to lend the money to them or not. That's a separate topic. But anyway, just to conclude the first part of it is, when you look at AI, you focus on speed and accuracy. There are two levels to it: operational efficiency and innovation, or radical innovation and introducing speed and accuracy in that. Thank you.
Thank you very much for this. This is interesting because we know that these procedures are going to be bypassed by completely new ideas of doing, especially doing banking in emerging markets where you don't have the data. People don't have documents, so it's forget about doing the classic. You have to do it in another way. It can be Facebook access or other kind of things that they can process. So let me ask now my friend Andrea, who's an entrepreneur, by the way, in FinTech, and also teaches these things at General Assembly. I would like to know from him, I would like to touch into the blockchain stuff because it's fascinating things that is difficult to grasp, and how blockchain is immensely applied already. We think it's coming. I think it's already here probably in things like, I don't know, smart contracts, regtex, and it's been used in food industry in the craziest places. So I would like to ask Andrea to tell us more because he's an expert of these things, of what he's seeing happening there for us.
Thank you. Thank you, everyone. Well, I think you made a good point. It's not very much about whether it's coming or not. It's very much about what can do for us. There is a very interesting study from Deloitte being published at mid-year, and it's a survey with all the main CEOs of very big enterprises. And what they all say is that they're all trying to find a good application in their own industry. And this is, I think, the main point. A lot of people couple blockchain with the financial industry itself, but it's not just about that. A lot of people focus on cryptocurrency only, on Bitcoin, because it's always in the news. But
that's my next question.
Yeah, but we will get there. But the thing is, what I want to stress is really, and kind of links with what you discussed, it's very much about the technology itself and how it can solve current problems, but also how it can solve future problems. Because, as you correctly mentioned, there is no solution now for future problems because we don't have these problems yet, as much we don't have future jobs yet, right? So I think right now, what we really see is that every industry, once they understood that DLT is something that can actually be applied to a lot of industries, they're trying to figure out how to do this in the best way. And automation, cost saving, all these kind of trends that we see everywhere. This is where all these business leaders are trying to find the actual, real solution of blockchain. I wouldn't stick very much only on fintech because there are a lot of other industries that are very much affected. As you mentioned, the food industry, but also healthcare, which is a big one. There is, I think, a good application on the supply chain itself. And the big trend is very much about digital identity, something that not a lot of people speak.
Digital identity.
Yeah, they don't speak very much about it, but the real way of leveraging blockchain is about incrementing the digital identity idea. Actually, there is a very good successful company in India that kind of bypass what you just described. So rather than facing all these issues that we face in the kind of Western world, right, that we're used to that because we have our own procedures, they just jumped that, and now they created through their own legal system, like their own identity system in their country. They're able to just implement straight away identity and get this identity trusted through the blockchain, and then apply this to every kind of interaction that any person can have in this space. So I think these are very much, it's a kind of overview.
An example of those food story. How can you use blockchain with food?
Yeah. So think about it as it's like you can mark something, and then you can follow this product. And again, as much as it works for food, it works for everything really, even for the glass, right? You can mark it, you can record it. This record gets a unique number that is going to identify this specific object. And then this object moves through the supply chain, and it gets to a point when it either just gets transformed or it just being served on your table, right? And you can track where this good has been all the way along. And this is essentially going to be trusted because rather than you trusting your butcher, on the road wherever you go by, you go to Waitrose, Sainsbury, or whatever, you actually can track yourself because the ledger is public. So you can go and see where this piece of meat or this bottle of water has been, where it's coming from, and where it's been the whole process, right? And this is trusted by the whole network. So which means it's not just I see that and I'm telling you is right, which is basically the way we all grew up really about a lot of things. But it's like it's there, it's imprinted, it can't really be deleted.
So it's like saying that mad cow disease cannot happen anymore because we can trace the cow, so we can trace everything. This is amazing development. Let me go back to Terence. Of course, we would like to see what he sees because he's a seer. So being a seer, we want to know several things. One is that he's an expert on mega trends. We'd like to know more. He's being cryptic on trends, but we want to know more, and also about the new jobs that possibly. And also, I'm interested if you can tell us about the financial sector. What do you think is the responsiveness of the incumbent banks and players to the attack of these new players, which are probably been disrupting piece by piece the value chain and attacking in the places where they think is interesting?
Okay, so first, I haven't got an oracle, all right? So I'm not really a seer. What I can do is offer some observations. As much as I like to think I'm, have that ability.
Better than others.
Well, I mean, I'm trying. So I think one of the things. So the other day, I think it was 2 nights ago. I was actually watching TV, and I watch TV all the time. Instead of preparing for my class, so there was some funky ad on Channel 4, and I was like, what is it all about? And for the following 30 seconds, it's just very funky. I said, okay, what are you trying to say? And then towards the end, it was actually, I think it was Barclays. Basically, that says now you can actually, if you if you ever lost your card, you can actually go onto the phone and turn off the card. Okay. So I was after I watched that that ad, I was saying, okay.
This is the response.
This is one worth the bank actually spend the money to produce to actually promote something that many other banks have already done, right? The challenger banks, especially the smaller ones.
In a faster way.
It basically tells me one thing, they are nothing more than catching up in many ways, okay? Now, and I can understand why big banks, they are actually in the catch-up mode. So you were saying, right, Nilesh, you were saying that there's innovation and there is operational efficiency. For donkey's years, retail banks have been trying to improve their profitability on operational efficiency, right? Whether it's ripping the customers off or the employees off. Thankfully, Diana is not here tonight. Otherwise, she will behead me. But to me, that's
no.
Having said that, bigger banks, what they really need to do is to actually create innovations, come up with new things. But they know that given that the organization, it's such a big organization. One of the biggest thing about technology is not the technology itself. It's basically, how do you get around the people issues, the organizational setup, the structure, in order to actually get the technology to work for you. So, they're big, so that's one. Two, we all have habits that are really difficult to change. So getting people to actually take on new processes is very, very difficult. Just try to convince, for instance, some professors to do more things online. It's hard. Okay, it's as simple as that. We would still give out papers. Three is that banks, they have got legacy IT system that cannot really actually get around with. It's basically, IT system is basically nothing more than patches on layers and then more patches. So if you want to get them to actually have like a technology that can work, that is a flow through, it's very, very difficult. So the only way, so going forward, what we see is this. It used to be the case where challenger banks just come up and then they face directly, like David and Goliath, against each other between the big and the challenger banks. Now what we're seeing is that going forward, bigger banks will now start to work with more and more with smaller companies and challenger banks. Challenger banks, on the other hand, they will start more and more working with the bigger banks. In all likelihood, piggybacking on their infrastructure because they have got the infrastructure. We are going to see a far more symbiotic relationship going forward. And that, I think, is making the fintech scene a lot more interesting. You're going back to what you're saying, the jobs creating are out of this. It's probably, it's a very long story, right, apparently. But the fact that in fintech, because it's a mixture of old and new, that is going to be the most likely winner. I think if you think about it, the skill sets required would probably be, combining old and new. Let's not forget, as investors, and I'm going to actually shut up after that, is this. The investors, right, as investors, I think investors now, they're actually waking up to the fact that they shouldn't be investing in just technologies. What they're looking for is business model consistency. So again, we're going back to the more human side of things. It's about understanding how the industry works. It's understanding how customers, what they want, and understanding how technologies can actually work.
Yeah, I think this is a very important insight for the little part that I understand, which is the investing part. This is absolutely true. If you see now, thanks God, investors are starting to look at both the technology and the business model, because in the last 5 years the opposite has happened, and we could have a situation where somebody like WeWork coming in and pretending it's a tech company when they're a real estate rental office with a $49 billion valuation, which doesn't make any sense, and in fact now it's tanking and going to zero because people start to realize that doesn't make any sense. So this is a good thing. I wanted to ask Nilesh, because he's a consultant, and so you are consulting with companies. I would imagine, are you both sides of so the attackers and the defenders, or you're only on one side? Because I got a few questions about companies like Revolut, eToro, I don't know, Satispay, things like this. And these companies, think about Revolut is a company that can do exchange rates at mid-market. For those of you who know what's mid-market, is an impossibility. I mean, dealing at mid-market means you never make money. Yep. It's an impossibility. It's impossible. There is no spread, and you never make money. And they do it. So how disruptive they are, and what's the reaction there? eToro is another thing that is Robinhood. All these apps that free trade. Yeah. Can you tell us what do you advise these guys to do or not to do?
Touching on the business model part, which is very interesting, because AI is a technology which is still maturing, and if you see, the history says that only when the impact of the technology on the organization, both inside and outside, brings about a significant change, is when the technology is called as disruptive. So that's the definition. So AI is disruptive or not, is the jury is still out there. But what is more important is the business model. So the business model changes how the technology is used, and that is more important. So if you look at Revolut and any other challenger banks, and some of them bigger names in Asian countries or China, what they are trying to do is they are capturing the market even before the competitor realizes what they are doing. And this is not something which is different in this day and age. I don't know if you know, but PayPal was able to do this. PayPal didn't know what is to be done, and they were capturing the market by huge number. It's only then they realized that we should start charging for the money transfer. Similarly was Google. Google search, the advertisements in Google started 6 years after Google had started working. I don't know if you know, but 2000 up to 2003 or 2004, they were not charging, and they didn't know that that's the way to make money. And now if you see, Google makes the huge money. So what I'm trying to say is, again, if you look at some of the things like there's a fintech in India called Paytm. Paytm allows you to do a transfer and do a payment. And they captured about 200 million accounts in a span of less than a couple of months because of demonetization in India. And what they did was, obviously they were not making money. They were trying to capture the market so that they could sell other products and services. Now Paytm has gone into wealth management. Paytm has gone into other products and services. So business model is very important. Again, if you take an example of what happened in China, when Alibaba went from e-commerce into financial services, the biggest bank in China, ICBC, said, guys, you stay in e-commerce, banking is not your world, or else I will enter into e-commerce. Alibaba obviously said, no, we are going into it. So what they did, I'll give you an example. So tomorrow if Amazon delivers you a book, and then somebody from Amazon calls you and says, hey, would you be interested in understanding more about wealth management? Would you be interested in seeing if an Amazon consultant would like to talk to you about investment management of your money? You would say, Amazon into investment management? No, I'm not interested. But what if a bank has got an e-commerce and a book is delivered to you? Let's say, taking an example here in UK is HSBC or Barclays, has got an e-commerce and a book is delivered, and then somebody calls from Barclays saying, hey, would you be interested? And you would say, yes, why not? So ICBC Bank came up with an e-commerce where the GMV was not more than $5 billion, but they made $80 billion through wealth management. So they were able to reach out to all those people and just deliver books, and that's the kind of thing. So the business model has become very important as to what you're thinking. So what Revolut and other ones are doing, yes, absolutely, they probably are not making money right now, but they are capturing market. So they are going down the route of freemium or premium and everything and capturing the market even before somebody else realizes. So from a strategy perspective, if you look at what Christian Slater said, that it's the edge of the market that defines the innovation. So if you're able to capture from the core till the edge in a very fast manner, then you can decide what is to be done. I will just conclude on one point and then give the mic back. Alibaba didn't charge anything for the first 3 years. And everybody made huge transactions on Alibaba. First year they didn't do, second year they didn't do, third year they didn't do, because they were getting funding from Yahoo. After third year, Alibaba said, guys, to all their suppliers, they're saying, we will close the tap and we will only open it if you pay. And just imagine what everybody did. Because for 3 years, they were used to doing huge business through Alibaba. There was no other option but to pay. And that's where all of a sudden, the revenue model became so phenomenally big that overnight they started making billions of dollars profits. So it is again based on that business model of how you are going to have a technology impact the outcome that matters most. Thank you.
If I may add something on what you both mentioned, I think it's very interesting. I'm a big fan of business cases as well. On the investing side, there is a funny story, if you Google it, about Long Island iced tea. So there was this company years ago that was called Long Island Iced Tea, and they were actually public, and one day they go like, you know what, we're gonna go ourselves blockchain Long Island Iced Tea, and their price spiked so much. When they were asked, are you gonna do actually blockchain, they replied, well, maybe one day, who knows, right? So still they got the money, and that's just a funny one. On the Revolut bit and on the Alibaba bit, which are both very interesting, about capturing the market, Revolut was born as a solution for banks like Lloyd's, so like tier 2 banks, which couldn't really cope with demand on the FX space. So they really didn't, at the beginning, come up with anything rather than an interface, right? But what they were able to do was to capture that niche of market that was unserved And also, at the beginning, now they got the banking license in UK, but if you were to open, I don't know how many of you had Revolut before, but if you were to open a bank account with Revolut, you would get a LLOY GB Lloyd's bank
That was
account,
them.
right?
Yeah.
So all they're doing really,
Yeah.
they're changing the interface, what you see on the user end, but the infrastructure is very much the old banks.
Yeah.
Now the next step, the next challenge, and I link to the Alibaba example, is for banks, if they're smart enough to offer the API white label solution to everyone. So
Yeah.
just, they can't really beat them because they created a user base, but they can just go around them and offer their APIs to companies like Amazon or any other e-commerce. Last example is, again, on the Alibaba, they acquired, was it 6 months ago or something like that? They acquired a company, which is called Word First. I don't know how many of you know this company. And yes, and they used to serve the mid-market, the corporate market, much earlier than Revolut. So essentially, the actual solution was there in the market already. But they were just brokers that would charge a lower spread, not zero spread. But they've been in the market, they're a UK company. The guy used to be a trader at Citibank, and he launched the company, I think, 10 years ago or something like that, 15, around that. And they built a lot of market. Now, they were not fancy, they didn't have a fancy app, they still don't, but they've been recently acquired by Alibaba. Why? Because Alibaba, as you correctly mentioned, goes like, you know what, I have their demand, I have an e-commerce, now I can serve corporations, they're my main clients, I'm going to give an integrated workflow, like an integrated solution that can actually serve my customers in the best way.
Yeah, this is fascinating. Revolut is an interesting story. I don't know if my friend is here. I was trying desperately to get an appointment with the CEO of Revolut called Nick Storonsky. It became impossible to, unfortunately, short notice because I wanted to. And the secretary told me that, first of all, there's got to be a benefit for them to allow anybody in. Secondly, his agenda goes by 10 minutes, so that's fine and it's okay. It's busy people, we understand that. I'm also very happy to hear about PayPal, the PayPal story, because being a modest shareholder, I'm interested into these things. And more interestingly, do you think, because we've seen, I'm very interested in this story, the business model of acquiring accounts, getting market share, getting access and exploiting it later is perfectly logic and solid, but we've seen lots of times when it didn't work. So what I'm saying is, companies now, Amazon is profitable, although not hugely by the size of the company, and my impression as a non-expert is creating a moat, and this moat is getting bigger and bigger. At some point, perhaps it's going to explode, perhaps, I don't know. But this strategy has got to work at some point where the distance between the losses and this happening with the scale up narrow down into profits. Is it going to happen, or these guys are going to go upside down? No, I mean, don't mean Amazon, of course, but I'm thinking the idea of acquiring market share per se, which has been loved by the markets, by the investors until now is being put into question, and the solidity of the business model, the capacity to quickly move up with the profit line is getting a lot more important. What do you guys see about this?
Very interesting question. There are two parts to it.
Just an investor's question.
Which side of the fence you are? I mean, we have seen what WeWork has. Obviously everyone knows about WeWork, and there are so many other companies who have captured and they were not able to capitalize and they were never able to make profits. There are a couple of other big e-commerce companies as well, which they couldn't do it, and they had to downsize, and the name didn't go well. What these guys do is they come up with a model and then they try to make profits out of it. Now, not everyone will succeed. Some of them are fast enough and are able to diversify on the same customer base with the products which is profitable. And that's where they make money. Take the case of Google. Search engine, they don't make money. It's the advertisements where they make money. If they wouldn't have introduced advertisements, we wouldn't have had Google. But it's a virtuous cycle. The more you have advertisements, the more you have search engine. But now, because of where we are with the data privacy and all, Google and Facebook are being told, guys, you don't have the right to have our data. So now they have to innovate. Will they be able to do it in the next few years? We don't know. But the second part of it, if you're on the other side of the fence, these guys are defining the market. So for example, Revolut is defining a market. The USP of Revolut or any of the challenger bank is to have an exchange rate on a debit card which is almost real time. And for an international traveler like me, it's a big thing. If I'm using it across UK, Europe and Asian countries, it's a massive thing because banks usually charge anywhere from a couple of percentage plus they make money on the exchange rate and those kind of things. And I've worked in some of the banks here in UK and they always used to convert it at least twice. So if you pay them in dollars, they would say, oh, we want them in euros, but then they would convert it through pounds. So every time there would be at least 2 transactions. They would make money. So the idea is when these guys are looking at that as an aspect where they're defining a market, saying that, hey guys, this is a market, here is a client profile that I'm targeting, and they are taking these products and services. If you're on the other side of the fence, you can come up with a product or a service which is profitable from day one and target the same client, target the same profile. So you're profitable from day one and you are able to go after them because the market is defined, the client is defined, the client need is defined, and the client knows, the profile client knows that this is what it is. If there is a better customer service than an XYZ, I'm sure they will jump. Take the case of Metro Bank. I'm not talking of what happened recently. Recently, Metro Bank is not in the news for good reasons, but why was Metro Bank able to capture huge fan following from the days when everybody was going away from the branches? So they came up with the concept of branch, and I worked there and I worked with Vernon Hill. So the concept was, it's the business model. We had a couple of principles. They used to say, we are into retail business, we just happen to be a bank. So this was in 2007 and 8. They used to say, you go to a Burger King and McDonald's, you get a burger wrong, what do you say? You get a replacement. You go to a bank, you ask for a credit card, they will say, or credit card or a debit card, they'll say, oh, don't worry, we'll send it to your house in 5 days or 10 working days. Checkbook, they will say, oh, we'll send it. And you would accept that. Why would you accept that? So that is where they introduced a better customer service with a branch. And they never called that branch, they used to call that as a store. And the concept is that just give them better customer service with absolutely no competitive interest rate, competitive mortgages. So from day one, we were told that everything is going to be profitable. Just keep it on the margin. It's not like we're going to keep it very high. It should be market price. So if the market price is 3.5%, keep it as 3.5%. We don't want to go for 3.7 or 3.9. We won't give them too much interest. But the best customer service, I don't know if you know, but first year we had more number of customers coming in, and there was an issue of there was a possibility of exceeding the second year and the third year targets. And that obviously on the infrastructure would have been a big issue. So they had to scale down, saying, oh guys, hold on, we don't want too many number of customers because our USP is customer service. And if you are not able to service them, we won't do it. So Metro Bank, and there are a couple of examples who are on the other side of the fence, they capitalized on the market. So you have to decide where you are going to be. So not every company is going to be profitable. Not every company is going to make a huge difference. But I suppose everyone will capture the market. And you have to decide on which side of the fence you are. Okay.
Thanks. I've got one more question each, one for Terence, one for Andrea. Then I want to show you just one thing on algo trading because it's so cool to see that I cannot resist in my financial crap, bullshit, basically, BS. Yeah. So, but because Terence is here, it's so difficult.
Did you say crap?
Yeah. It's impossible to get hold of him normally, and for more than 3 seconds, as you can see from his busy attitude. And he's studying trends, and what's
the question?
The question is, can you tell us because I tried before, you didn't, of course, answer anything, and about these mega trends you're studying, at least the ones which are the question is, what do you see in these mega trends in artificial intelligence, in utilization? I think the trends that you see in what's going to happen in society when these things are happening, because you're studying the effects of this on demographics, on lots of other things, reading your books, right, which I suggest everybody does. But
all right, I'll try to make it as brief as possible. First, I want to focus on algorithms, because like otherwise we'll be talking, like I'll be still talking about it for like the next 15 hours. I think there are a couple of things that AI algorithms are actually being introduced that is really turning many aspects of financial services upside down. So for instance, robo-advisors was one of the biggest things around. And at one point I remember, probably 2 years ago, when robo-advisors really actually at the peak of its, at the peak of everyone's conversation, it was seen as the way to actually replace a lot of the frontline staff, okay? Especially those who are trying to sell
financial
products.
advisors.
Financial advisors, right? Did it really happen? No. I think one of the reasons why it didn't really happen was, one, the capability was very, very limited. I mean, banks were actually trying to be very smart. They're saying, listen, if you have got a lot of money, we'll send a financial advisor, in human form, to serve you, right? But if you have got very little assets to invest, I'm terribly sorry, you have to resort to the cheap robots, right? I think that itself is one turn off. And second is this: if anything, a lot of the time, what you see is that those people who actually got the money, they tend to be better educated. They would rather actually do things themselves. It is exactly the opposite, which are basically the people who need help, that they need to want to talk to humans. And besides, if you ask me, right, whether to hand over my money to a human or to a machine, I would probably hand over to a human still. When it comes to investment, okay, that's how I'll trust the humans more, right, for whatever reasons. So I think in many ways, jobs are not really disappearing as quickly as we anticipated. On the other hand, for those jobs that require much less human interactions, right? So like you were saying earlier on, a lot of like a Citadel, right? They are basically all quant stuff. I remember it was about I think it was about 6 years ago, I think. If you were 10, 15 years ago, if you actually got a PhD in finance, you will be hired in no time, because everyone is looking for quant monkeys, okay? But 6 years ago, if you actually have got a PhD in finance, you'll be very lucky if you're actually working in a mid-office, right? Because a lot of the algo, a lot of the trading part is actually done by algo. So when it comes to investing, when it comes to those things that requires a lot of calculations, accurate calculations, speed and accuracy, again, those are the things that are inevitably going to be taken over by machines. Okay. Another thing that I think when it comes to trading is this: it's not always actually the trading part that involves technologies. A lot of the time, it is actually the processing and making sure that the orders actually go through properly and regulatory compliant. That is the key, right? Because if you make a wrong trade and the trade is a non-compliant, again, big fine. So I think more AI would actually be deployed in the back end sense, because one, is a lot easier to put in, and two, you can actually see the tangible results, as opposed to robo-advisor.
That is very true. Citadel is a good example. It's this huge trading house in Chicago where you see now there are about 10, 15 traders looking at the screen, about 500 quants creating the algo. So this is, I'll show you one in a second because it's so cool. And you can go and find out. There is a movie on Citadel. You can see that it's scary, and if you want to be, you don't want to, unless you want to have a PhD in astrophysics, which is probably needed now. Finally, Andrea, we need to know a little bit more about this because I don't know what to do with this Bitcoin and other cryptocurrency, if we need to invest or not. I couldn't make up my mind, and I haven't yet, and I suspect it's going to go up, but I don't really know, so I don't quite understand. And more seriously, there is new things happening like tokenization, tokens, new markets. Cryptocurrencies are, some people say, are liberation, which is an interesting and appealing and intriguing thing. It's a liberation from the slavery of central banks and fiat money, which is based on absolutely nothing. Some people say that these currencies are certainly a bigger store and more certain store of value than fiat currencies. They might or not have a point. It's a very interesting debate, and I would like to know what you think about this.
Yeah. Well, we have to break down this question in different points, really. First, I'm not Oracle, so I don't know whether it's going to go up or down. I'm sorry. I mean, and if I knew, I wouldn't tell you. But anyway.
Like if you moves the mark.
No, but really, I think, if you want to make some kind of valuation around it, Bitcoin itself is very much about adoption. Now, two things that we always discuss when I teach, at least, there are the basics as an asset. You can look at the, volumes, like all the basic metrics, really. But there are a couple of things which are very specific. So there is the adoption part, which is very important. If you remember, at some point, Bitcoin went very much up, right? And then Microsoft gets in and says, we're not going to accept Bitcoin anymore, and it drops. Now, does it really jeopardize the value of Bitcoin, the fact that they don't take it and they don't accept it anymore? Not really as an asset, but the non-acceptance of a very big company that brings trust into the asset, of course, has this kind of effect, which gives it a lot of volatility, really, which is why it makes it kind of less secure at our eyes. And then there is regulation. Regulation, which is a big thing, not about Bitcoin only, but it's very much about every cryptocurrency. Now, regulation really struggles to keep up. They're trying recently, Bank of England published something which was very interesting, especially in the asset tokenization bit. But again, it's like it takes a long time because it's something that is very new. It's very not much defined yet, potential, what can be done, what can't be done. And we all think about it as a mainstream solution, but it's very much not because it's very young. I'll give you an example. If you think about the amount of transactions that you can actually do, and you think, oh yeah, blockchain is very disruptive, Bitcoin, you can actually do 7 transactions per second. At its best, you can do 27. You know how many you can do? You know how many you can do with Visa, which is one of the oldest technologies? 24,000. Mm-hmm. So old technology is still the better one. Yeah. But it's the whole technology behind, which is revolutionary, as I mentioned in my in my previous bit. Now, linked to this is like you asked me whether it's liberation, fraud. On the fraud bit, I could tell you, go out to a black taxi, black cab taxi driver, and you ask him what he thinks about Uber, right? What do you think he's gonna tell you? He's not gonna like it. Why? Because he kind of jeopardizes his position of power in the market. So if you hear people like Jamie Dimon or anyone else really, and they just say bad things about Bitcoin itself, they're kind of justified. Like 50% they have a point.
They don't say it anymore.
They don't say it anymore, right? But you see what I mean, right? Of course, they will never promote something that brings a change in the industry. And about liberation, yeah, well, it kind of changes the market as we know it, because you can't really do monetary policy with Bitcoin, right? So it's a very different way of intending.
It's a good thing.
It's a very different way of intending it, and it's like governments, of course, are concerned about it because this takes power away from them. Now, the very interesting challenge is they will try and build their own cryptocurrencies. Europe is doing that already. But isn't that counterintuitive? Because that's meant to be something that is distributed and you privatize it again. So, it's like a very blurred space. And then there is, I think, the most interesting bit, which is the tokenization part. So that's what really makes the difference, because you can have as many cryptocurrencies as you want. I don't even know how many we have now, but we have like a lot. Yeah. And it's very easy to create more and more. Now, we see tokenization as the actual application of the solution itself to different problems. I like to think about it, around three kind of applications really. So we have the normal ICO as we know it. So you just create your own currency and that's it. You have the securitization. So essentially what you do, rather than creating a structured product, you create a basket of tokens. And the utility of that is that you can actually get access to fractional ownership of things, right? So things that, maybe they had very big tickets, you couldn't really access them. This allows you to get hold of different securities. I don't know if you heard, but one of the things that is discussed right now is SpaceX and the tokenization of the SpaceX ownership. So Elon Musk itself is actually thinking of doing that. And, he's pretty smart, that guy, so other than the Tesla truck, but that's a different story.
And it would even replace shares, right?
Yeah, exactly. Think about a share, right?
Yeah.
And it's
Share tokenized, yeah.
Yeah, but it's just like it's the same concept. Now, what is the difference? Is that think about all the legal process that you have to go through to issue shares, to go public in the London Stock Exchange, right? Versus actually doing it online. And by the way, it's news of today. The London Stock Exchange got a partnership with one of the major players, which is AALX, if I'm not wrong, which is a Chinese company who kind of trades, it's one of the major exchanges, and now they're offering cash, futures, and other derivatives on the London Stock Exchange with real-time trading. So this tells you that even the old institutions are understanding that this is the trend. And the third bit is going to be utility. So if you think, I'm actually working with some interesting startups right now, and all of them, they see the application, not of cryptocurrencies themselves, but the tokens. So you can get access to premium products, to premium service if you collect enough tokens. And this is not rocket science. I don't know how many of you have an Amex, but when you spend your money with an Amex, you get points each pound that you spend. Double if you do that in a foreign currency, by the way. But that is exactly the same concept, right? So it's very much digitalizing what we used to do in a different way. And I think this is very much what it's going to be like. So I don't know, I think you should really, if you want to get a grasp of what is going to happen next, it's very much about the technology. And getting back to your point, like technology in 2019 going to 2020 in a month is not really a problem. There is technology. It's very much about capturing the right problem and solve for that problem. Just one last bit. This moves back to the previous question, which was, you can apply the same technology as you mentioned on different markets. I've been in Italy last week. It's one of the worst places in terms of digitalization of finance. And I'm telling you, a lot of startups are coming up now offering things that for us in London, in England, they're like normal. Like you look at them and you're like, yeah, why couldn't you not have that? But for them it's not, and in many other countries as well. So you just need to get the right technology and apply it to different demands. And this is going to take everyone at some point to the same level with the frog leaps that you mentioned earlier as well. I think that's a very good point. Not all the countries start on the same level of challenge, but they can definitely get up to level.
This is very interesting. Just to signal a radical change in state, in political position by the Chinese government, which has been banning all these currencies and ICOs and stuff for a few years. Now it's completely changes his position and is now favoring the adoption of these things. This is going to be immensely a sea change for everybody, because that kind of radical adoption of this new technology over there is going to be some meaning. So let's see what happens here. We got to wrap it up. I wanted to show you this, but because I can't resist. I mean, come on, this is too cool. This is an algo trader, one of the million examples of the things that Terence and my friends were talking about. This is a market making. You see here, bid 13.10, offer 11. And inside, there is a thing called market touch. The spread is ridiculous, right? Because it's 0.01%. It's nothing. Now, what happens in an algo trading? The algo trader, which is not a person, is a computer program, reads things and decides. Around 40% of trades on American stock exchanges now are done by computers, and growing, okay? It's done by this kind of things. Here you see something like this guy puts he basically wants to buy 100 lots. These are lots of futures, okay, in a very liquid contract. He wants to buy 100 lots. So he's here. He's at the back of the queue. There are 600 on the bid. He's at the back of the queue. So he wants to buy. In order to buy, instead of paying up and lifting the offer at 11, which is what you do if you are in a hurry, you want to save 1 cent, which is important when you're talking about billions, okay? And so he wants to be hit. So he's sitting there waiting to be hit. To be hit, he puts his real order in, and then just one point above the touch, he puts a large order, which is totally fake. It's legal, but it's fake. It's showing a 4,000 for sale. So computers that respond to algo will read the unbalance and say, ooh, there is a lot of people selling huge amount of stuff and very little people buying. So the computer will jump ahead in a millisecond and start selling because the bid side is weak. So it's going to cause the price to go down. And this is exactly what happens when this happens. In reality, he's a buyer, but he's showing a big sale order. He doesn't want to sell 4,000, he wants to buy 100. And is a trap, is a trick, is a hook for computerized trading that reads the unbalanced volume with very complex equations. And they see there is an imbalance. Every time there is an imbalance, they will try to front run and do wherever the market is going to go in the easier direction, up or down. The opposite can be exactly the same. And this is an example. So you want to buy, and this is bordering on illegal. And this is still legal, but it's possible because of high frequency trading, which is an amazing phenomenon where you have millions of these orders, of which only a super tiny fraction is really executed, but it's enormous influence on where the market is going. This is changing things because this is going to be a lot more dangerous trading for real people, because markets are going to have a lot more volatility in the future. They're already showing it this year and last year. The more computerized trading is happening, the more there is an emphasis in fluctuations. It's amazing.